Hi, everyone, and welcome to another edition of the Investor Talk Show powered by Real Estate Investor. I'm your host, Neil Peterson, and today we're digging into a topic that matters for anyone building, scaling, or stabilizing a business in South Africa. And whether you're funding growth in a more uncertain environment or you're seeking smarter capital to reshape opportunity for yourself as an entrepreneur, you're at the right place. So joining me today is René Botha. She's a regional investment manager at Business Partners here in Cape Town, one of the most experienced alternative small medium enterprise financiers in the country, backing entrepreneurs with capital, expertise, and support. So René, welcome, and great to have you on Investor Talk.
Thank you for having me. It's wonderful to be here today.
Absolutely. So let's set the scene a little bit for the small medium enterprise funding landscape. I mean, we've seen that South Africa's small business sector has faced intense pressure over the past few years. Yet it still remains the backbone of job creation. So from your vantage point, what's the current state of the SME funding demand, and where are you seeing the strongest appetite for finance?
So what we experience currently in the market for small to medium-sized business is that there's a big need for funding between 250 and a million rand, 250,000 to a million rand. Specifically for bridging finance, short-term finance, equipment finance, that kind of thing. So that's a big need in that specific industry at the moment. And I think specifically on the industries that looking for funding at the moment is more in the manufacturing industry as well as the hospitality industry. Either the more tourism guest houses, accommodation facilities, as well as restaurants. So that we see a big need for. Obviously, there's still a need for buying new properties, buying your own property, owning your own properties, and that is more in the bigger amount sector. But small businesses specifically need that quick cash that they can use for their working capital needs.
Excellent. So let's just talk about alternative risk finance in more detail. I mean, because Business Partners is often described as an alternative risk financier. I mean, maybe just tell us exactly what that means and how does your approach differ from traditional banks?
Alternative risk finance is exactly what it says, that there is some kind of risk involved. If it's either entrepreneurial risk, it can either be financial risk, or it can be business risk. So Business Partners, being an alternative financier or a risk financier, is specifically to where we take risk in any small to medium-sized business. And in many cases, it will be financial risk. So the entrepreneur might not have enough own contribution to contribute to the transaction, or enough security to contribute to the transaction. And therefore, there's a financial risk that if the business fails, Business Partners won't be able to recover their funding. Furthermore, it might also be that there is a business risk. For instance, it is still in a very growing phase of the business. It might be a startup. I don't say we do so many startups, but we do consider them. Or it might be still in the early phase of that particular business, saying, for instance, it just started, it has some kind of traction, and it's now in a steep growing phase. Or it is in a maturity phase where they just need that next amount of funding so that it can take them to the next level. And in terms of that, there's some business risk or entrepreneurial risk. The entrepreneur just don't meet all the requirements of the bank. Maybe a credit record that's not that clean, or not that long in business, or maybe failed in the past or something like that. And that is all, considering all of those is all things that we can consider. And in terms of that, we can assist that kind of entrepreneurs in those kind of businesses.
Okay, good. So have you seen the risk appetite evolve? How has it evolved, especially for businesses that might not tick the traditional boxes?
So if you ask me how it evolved over time in terms of looking at that specific risk, I think Risk, if you want to mitigate risk, you have to understand risk. So you have to understand the risk that you take. So if we do our due diligence and we ask certain questions, it's very clearly to make sure that we understand the risk business partners takes in this regard. If it is financial risk and we stand to lose money, obviously we will ask quite a number of questions to ensure that if we understand that, and that's all about that. Anything in life, there's some kind of risk to it. If I want to buy a car, there's obviously some risk to it. And therefore, I ask a lot of questions around it. And that's the same for business partners. If we start asking questions, if we do our due diligence, it's to understand the risk, not necessarily to say we don't want to do the transaction. It's just to say, okay, there's an amount of risk. And in terms of this risk, I would like to be compensated for that risk. And we should be rewarded for the risk that we are prepared to take. And the more you can understand the risk and you can control the risk to a certain extent, the better that type of transaction will be and how you put that together in the end.
Okay, great. So, what kind of businesses and sectors are currently being financed with business partners? I know you've mentioned a couple already. Are there any focus areas where you particularly more active? Manufacturing, services, retail, property-backed businesses. I know you mentioned some catering business as well.
So I think the flavor of the month or the flavor of the quarter is student accommodation. We had quite a number of applications for student accommodation at the moment. Due to the need for accommodation in that industry, they've talked about 500,000 students that do not have accommodation at the moment, or where they can't provide accommodation for these students. So many people converting their residential properties or their small flat complexes into student accommodation. So we often get that kind of applications. Other applications specifically in the working capital environment for shorter term transactions that we often see is those logistic kind of companies where they suddenly have a big load or a bigger contract with one of their customers. They need fuel and they need travel costs and they need maybe more people. And it's for a once off or a more new contract that they have to look into, and they need bridging funding specifically or working capital for that. We often see those kind of transactions. And then there's also in other sectors the residential developments. We do get quite a lot of those. Specifically here in Cape Town, we receive a number of new applications for residential developments, as well as in the KZN area. More to the north coast, there's a lot of new developments in that particular area. Manufacturing, yes, definitely, as I say, for contracts, and that's in many different kind of manufacturing concerns that we're looking at. We do receive those, and then in tourism as well, and the need for either renovations, which we had more in the winter time, but now it is also to accommodate the season so that they can be ready for the season specifically. So those applications we see quite a number of.
Great. So, what's the key criteria you look for when you assess a funding application like that?
First of all, the viability of the business, obviously. I think that's key to anything for us. If the business is viable, then you can definitely put some kind of transaction in place that will support that viability, because you can also not do a transaction in such a way where you actually put the business under more pressure, and in the end you affect the viability by too expensive funding charges, and the business is constantly under pressure to really grow. So viability is for me key. Then furthermore that we look at is obviously the track record of the entrepreneur. We look at the financial statements of the business as well. Is it healthy? Is it what is the growth tendency in that business? Are the expenses under control? So we look at all those. So we do a proper assessment of the financials, the debtors analysis, the creditors because that will give us indication if the business, if the turnovers that they are currently doing are, is it sustainable for the future? Again, also the expenses and the needs around that, the gearing of the business. How's your debt to equity ratio? So do you have quite a lot of debt in your business? Do you service that debt? Is it expensive debt? Can you service that debt in the future? It doesn't help to bring in more debt, and it's already a very highly debt, bring in more loans, and it's already highly geared. And also in your personal capacity. I mean, if you have to live a very high standard lifestyle, and with that comes a lot of costs, then you will take that from the business and you will put more pressure on the business and the cash flow of the business going forward. So that all those factors we do take into account when we look at an application, and there's many more. So that's just a few of them.
Excellent. Great. So you often say business partners, I mean, they back people before numbers. So how do you balance the human element, the passion, the experience and potential against the financial metrics?
So I found it for many years that the most important, I don't want to call it now thing, because that's the person. It's all around the person. You can have an excellent business that was run by an excellent jockey, and a new person will take it over and have no clue what that person is doing. And in the end, that business will go down, because it's all about the person. It's all about the jockey, the passion of that person, the knowledge of the industry, the business acumen that that person has, the networks that person has, all those kind of things you have to take into account when you look at first of all the person. Is it the right person? Now, that's maybe one of the most difficult things to assess, is the person, is that the right person? I had a colleague who always said that people are like chameleons. So when you see them in the beginning, it's the different person after you have invested in that business and that business goes under. It's not the same person. So definitely a chameleon. But in the end, you have to make an informed decision about that person. And therefore, we request things like a CV, industry know-how, do reference checkings, look at the personal balance sheet. So all that, just to get a feeling for that person, but to look people in the eye, to spend time with people. For me, that is the most important part. No, AI will not be able to help you with that kind of assessments in future. It's all about that personal touch that we will still have with that particular person. And then obviously you bring in the numbers and you get all that information together to really assess if the business will be viable.
Okay, excellent. So without naming names, how can you share, one or two recent funding stories that highlight how business partners took a calculated risk on an entrepreneur and how that paid off?
So I can tell you maybe two interesting stories really fairly that we've done, and that's for success stories. And I have many more, so I can keep you busy for the rest of the afternoon. But let's keep it short and sweet. So I'm thinking of the first one that comes to mind is this entrepreneur who started off from very humble beginnings. He lost his job, he got retrenched, and then he had to start a business, or at least start something to get an income for his family. And he started from his kitchen preparing pizza bases. Then later on, it turned into small braai broodjies. We all know those kind of things. Here in South Africa, it turned into that. And later on, his wife got fed up with him and kicked him out of the kitchen and said, go and find yourself an alternative space to do that. Then he moved in with a friend of him who had a food processing business and factory that he operated from. And he said to him, well, can I use it at night while you use it during the day. And it worked that way very well. And they started off, and he took the night shift. And then in the mornings, when his friend comes back to run his business, he moved out. Later on, he had grown that as well, and he could get his own premises that he rented. But then he started needing more funding, and he asked a friend if he can assist him with funding. Friend did help him for a while, but as it goes with partners, they also have a life, and then it's buying rather that nice property on the East Coast, or they want to maybe go through divorce or something like that. And in the end, he wanted to buy out his partner, and that's when he came to Business Partners. So Business Partners assisted him then to buy out his partner at that stage, and also with some working capital to invest into the business so that he could grow the business. Not too long thereafter, he approached Business Partners again, and this time was to buy his own property. So then he could buy his own property and to really make it its own, and also we also invested in some equipment. So the business really has grown very nicely over the time. So that is for me one of the very successful stories that quickly comes to mind, where Business Partners, when he came to us to buy out his partner, there was no other financial institution to help him at that stage. There wasn't really a lot in terms of security because he didn't have a very strong asset base. He used all his resources to invest into the business. Therefore, he approached Business Partners and we could assist him. And later on, we helped him with 100% funding for his property. The other story is about an entrepreneur. She also decided, look, she wants to go on her own. She wants to rather be closer to her children. And she started baking rusks, also very South African. She started with baking rusks. Very soon, she sold it to family and friends. She was selling it to family and friends. And from there, she moved on, and she actually grown the business because the family and friends said to her, well, this is so good, why don't you really make this into a business? That was what happened. Very quickly, her husband joined her as well in the business. He became the financial manager of the business. And they started, and they actually expanded into this business, baking rusks. They came to Business Partners also to grow the business, to buy more ovens. At that stage, again, there were some securities available, but not enough to cover us in full. And the business was very much in a growing phase at that stage. So not showing that much of profit, but they had good contracts in place. So we believed in the entrepreneurs, and we believed in the passion of the entrepreneurs. And that's how they've grown. Later on, we also assisted them buying a property, and they also they could then also actually contributed a deposit to the transaction. In very soon, they were in a position where they could also exit from the transaction. So that's two of them that quickly comes to mind. There's many more very typical South African businesses that I can think of, but that's two that I can share.
Okay, great. I think two very nice stories. So let's just talk a little bit about the common mistakes that entrepreneurs make when applying for finance. I mean, what advice would you give to help them present a stronger case?
So this sounds very, I have to say, people think we just talk when we say this, but you won't believe how many entrepreneurs come to us and they don't have their financial statements or their financial information readily available. And if they do have it, they don't know what's going on in there. So they don't understand it. If we ask questions around that, they will just refer us to their auditors. And this is, for me, one of the biggest mistakes an entrepreneur can make, is not to understand the financial statements well. You have to know what is going on. If you want to understand your business, you must understand what's going on in your financial statements. Your management account should be up to date, and it should be readily available. I think that is, for me, the first thing that people definitely have to attend to. And not if I ask you around your deep percentages and you can't give me the details around it, how how you actually do the costing of in your business, then I start doubting about you as an entrepreneur, and your ability to run this business. The second thing that I think the mistakes that they make is they come to us hoping that we will give them a guidance on how much they should apply for. So they don't have a clear vision. I need so much, and this is the reason why I need this, and this is what I will do with this money. So they are very vague when it comes to something like that. And then the third thing is that people are sometimes with their back against the wall, and that's the worst position to be in. You should be in a position where you are also able to negotiate. So I know financial institutions comes to you and they would like to dictate, but it's very important that you feel that you get a fair deal. And it's very important that you ask the questions to ensure that you get a fair deal.
Okay, excellent. So finally, where do you see the biggest opportunities for South African entrepreneurs over the next, say, 12 to 24 months? And how can they position themselves to access funding and also grow sustainably?
Okay, so that's a very impactful question. But I think, first of all, if I look, I think there's so much potential, specifically in renewable energy in South Africa. I know load shedding is not really a threat at this stage. It might become a threat again, but it seems like it's fairly under control. But in terms of the cost of energy and where we grow, and if you just take around AI and the cost of energy to actually develop enough space to keep all this data, that will definitely be something to consider for the future is renewable energy. I also think what you should consider is maybe other tech platforms, data, definitely something to consider. Look, I'm not an IT expert, but I definitely think that's the space to be in. Also, for me, it is around the health and health industry, and specifically with new developments in that specific industry. There's a big need for that, and there's a lot of potential in that specific industry. Online e-commerce and online retail.
Yes.
If you more and more people tend to go that route, and then green and sustainable businesses. That's absolutely something for the future. And if you can really invest into something like that, I think there's big potential in that specific ones.
Excellent. René Botha, Regional Investment Manager of Business Partners. Thank you for the insight and clarity. Thought that was a great conversation. And to our audience, if you're watching this, you're an entrepreneur, you're needing growth capital, strategic funding, or support, you can visit businesspartners.co.za for more information, or you can click on the link below. Send us, and Business Partners would love to have a chat with you, with René and her team. And for more investor talk, conversation, insights, you just stay plugged into rei.co.za. I'm Neil Peterson. Thanks for joining us. And thank you, René, for joining us as well.
Thank
Great,
you.
great chatting, and we'll see you in the next episode. Thank you.